The following is a presentation of TFNN.
Let's go to David from Clearwater.
Hey, Steve, thank you for taking my call on this one, and to pass a compliment to you. Taking a lot of classes from Tom since I became a Tiger back in 2009, and they're always phenomenal classes, and last Friday was my first class with you. And just want to say, Steve, fantastic. You were well prepared. Material was excellent. It was timely. It was a really, really, really good class, and you kind of opened my eyes to a few things that have enabled me to use your terminology. Take massive action.
Hey, there you go. I love it.
Live at TFNN, The Trader's Edge, with your host, Steve Rhodes.
And he's picked out a landing spot that is a good 25 feet above the hull.
There's a good chance he doesn't get this inside the mark of his ball.
Well, here it comes. Oh, my goodness. Anything like that. This guy's pretty good.
Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the August 28th. Terrific Thursday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. I hope everyone out there had a wonderful Wednesday. Let's make sure that you and I, that we do all that we can do to have one heck of a terrific Thursday. I know I'll do all that I can for the next couple hours and share with you extraordinary tools that we use here at TFNN to help us understand where price is headed to. We use that lightning bolt pattern, that A to B equals CD pattern. We utilize Fibonacci expansions and retracements. Of course, the combination of those two would create those Gartleyan butterfly patterns. We use Japanese candlestick charting. We use TAS professional market profiles out there. We use Chapman Wave. We use it all. We take a look at swing point analysis. You name it. We've got it here at TFNN for 10 hours a day. And thanks so much for joining us. Now, as we begin our day, let me say that for me, every day is a gift for me to be here with you. That's why they call it a present. And I do appreciate your presence with us here this morning. This is an interactive show. That means that we've got a call-in talk number. That's right. You can just pick up that phone, give me a call at 877-927-6648. I would love to hear from you. Internationally, you can call me at 727-445-1044. Then you and we can go on an expedition. We can go hunting for bulls and bears. So this is Terrific Thursday. Thanks so much for joining us. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we've got Dow futures trading off about 61 points. They're trading out at 17,031. S&P futures down 8, trade at 1989. NASDAQ futures off about 15, trade at 4,058. Russell 2,000 off $5, trade at 11.65. King dollar up 9 pennies. She's trading out at 82.54. Goldilocks on the move this morning, up $8, trading out at 12.91. Silver up 21 pennies, up a little over 1%, trading out at 19.62. Light sweet crude up 54 cents as we speak, trading out at 91. How about that? 94.42. A quick peek across the globe out here. Let's check in on what's going on across the globe. Let's take a look at the DAX. We look at the DAX right now. You got the DAX trading at 94.44, off 125 points. So let's go check in on the DAX here. We'll look at the DAX, the FTSE. We'll do this quickly just to get a feel for what's going on overseas, see if there's any clues out here. Now, as we take a look at the DAX, these last three candles here, the day's not over. The DAX has still got several hours of trading left in it. But right now, that is what's called an evening star reversal pattern out there. That is a bearish pattern. If we take a look at retracements from the swing point high, that takes us to the trading session of June 20th, down to the low that was put in here on August the 8th. What we'll also see is that price made it right back to the 0.618 retracement level. 96.12.64 was the number we actually saw the DAX get up to. 9600.85. Boy, that is pretty good work out there. So now you've got a bearish reversal signal at a 0.618 retracement level out there. And oftentimes at that 0.618 area is where you actually see the A to B, the C leg in this case here form. This would be an A to B equals CD to the downside potentially out there. Now, what does the DAX got to do? It's also really coming right back into its last gap up, its last level of support. That's the high of August 22nd. So at that stage, at 94.1439, that's an open window. It's an open gap. That should be a level of support. We'll see if, in fact, that area holds. That's what's going on inside the DAX. We look at the FTSE out here. The FTSE off 23 points, trading out at 68.07. Let's go see what kind of retracement work the FTSE has in it. We'll go from its most recent swing point high. That'll take me back to the trading session here of May the 15th, 2014. Well, I got to grab the right tool out there, or if I did grab it, I messed up there. Let me try that one more time. There we go. I did not grab the right tool. There we go. Now we'll take a look at its retracement. So in the case of the FTSE, it's done the 0.786 retracement. When a 0.618 retracement level fails, it heads up into the 0.786 level. Now, unlike the DAX, which has a bearish pattern out there, well, the FTSE does as well. It's not the same type of pattern. Right now today, if it closes below yesterday's open, 68.2276, you'll have a bearish engulfing candle out there. Here's your evening star pattern inside the FTSE. That takes you back to July 3rd, July 4th, and July 7th out there. That had set up a high as well. That's what's going on inside the FTSE. If we go take a look at what happened overseas in Japan last night, the Nikkei closing out at 15,459. Not off too much out here. In the case of the FTSE here formed a little bearish engulfing candle right here on August the 26th, so a couple of trading sessions ago. What else do we have here? And the Nikkei. Did I say FTSE? The Nikkei. I hope I said the Nikkei. Inside the Nikkei struggling right here at its gap down back on January 23rd, 2014. That level has acted as a resistance point out there. Getting above that would be bullish out here, about the 15,690 level. Let's go take a look at the Hang Seng. Let's go see what the Hang Seng is doing, up 177 points out there. What is it doing out here? Well, if we take a look at A to B equals CD, patterns off of the bottom out here, A bottom back on March the 20th. Let's go see what pattern was out there. The A point is the March 20th low. The B point is going to be the high out here on April the 10th. It pulls back, looks like probably a 61% retracement on May the 7th. What it has done, it's made the 1.618 expansion level. That price target was 25,057. It actually got up to a high of 25,243 out there. Now we're seeing a bit of a pullback. I guess what I would do when we take a look at the Hang Seng, because it has had such a nice move out here, is I would take a look at the rising price channel out here. So let's go draw that in. The rising price channel inside of the Hang Seng. It's going to be along these lines right here. We're going to talk about the rising price channels because we're going to go take a look at gold here during the show. But there's your rising price channel inside of the Hang Seng out there until it breaks that level. Just a natural move back. So the next buy area potentially for the Hang Seng, or the level to be watching, is right around the 24,350-ish type area. Let's go finish these markets off by overseas, that is. Let's take a look at the Shanghai. Let's go see what the Shanghai is doing. It was off 14 points last night, down about 0.6% out there. What can we do here? Let's take a look at expansions of swing points. Let's go get an idea for the expansion that we see here inside the Hang Seng. That's going to take us off of this swing point here from April the 10th down to the low that was put in on May the 21st. Hey, how about that? Johnny on the spot out there. It's 1.618 expansion before it started to give us some reversal signals out here. Was 23.48.58. Hey, it didn't hit that number. What it got to was 23.54.34. Now, how about that? In just a very short order period of time, we have used multiple tools to help us identify logical areas of support, resistance, and so forth. Now let's go find some areas of potential resistance, or support, I should say, inside of the Shanghai out here. You know, I have to say that the best thing to do would be to just simply take a look at a retracement level coming off its most recent swing point low, June 20th, to the high that was put in out here, that little high wave candle that was on the trading session of August the 20th. A natural pullback for the Hang Seng ought to take it back to 22.59. Of course, that's really not the natural. That would be if it only brought If price only came back to 22.59 and then began to take off from there, that would be a strong A to B equals CD pattern to the upside out there. The natural retracement would be 2200.29. Now, I mentioned rising price channels. Let's go check in on gold. Let's go see what Goldilocks is doing out here. We'll switch over to this tab. The TAS Market Profile tab out here is going to have a little bit of a delay. I thought I had the weekly out. Well, that's silver. So I've got to grab the right tool out here. Let me grab, where's Goldilocks? Come on. Where are you? Here you are, right there. Now let's go take a look at Goldilocks. Then we'll take a look at that rising price channel. What do we know about gold out here? Well, price has held that rising price channel. It takes us back. We're using the bodies of the candle. That means we are using the trading session right here to begin our rising price channel from December 16, 2013. The close there, 12:05.70. We can use the very next session. We can also use the session to close here back on May 26th. I prefer to use that, so we're not using the close of one session, the open of the next session. That kind of is a, what kind of jigsaw puzzle is that when you're putting things together? However, if you do go ahead and extend it out to that May 26th close, that's a different story. And then you go 2 weeks later into June 9th. So there's a nice little rising price channel on a weekly basis. Here, the key with Goldilocks is going to be a close above 1302.90. Well, the exact number, we'll call it 1304.70. Now, at 1302.90, you get above a weekly profile low. You get it back into at least neutral territory. I would say perhaps more than neutral territory out there. Of course, if you get a close above the candle session from last week, at least the open, that's the 1304.70 level. There was enough of a decline here for that to be a bullish engulfing candle at a level of support. That is what's going on inside gold on the daily chart. If we go take a look at gold on the 120-minute time frame out here, let's pull that up on our chart. Let's take a look at a couple other tools that we like to use here at TFNN. First of all, if we take a look at the A to B equals CD tool, let's do that on the 120-minute time frame chart. What we're going to use this little low that came in here, and that is on the. Do I have the? I just have the. I don't have the time on that right here. Well, let's go. Let me. I'll draw the tool in, then I'll come back and tell you the time. I just need to put one more thing on my screen out here. But first, what you're going to, let me see, where's that data box? It's right. I always get here. Show the data box. Okay, I've got that off the screen, and now where's my cursor? There we go. It's probably I didn't have my cursor. That's what the deal was. Okay, now we're back. So at 5:15, that great song by The Who, the 5:15 out there. That was our A point, and that was on August the 25th out there. Our B point was out here, a little shooting star, it looks like at 10 a.m. This was on the 26th. It pulls back into the 26th down at about 8 p.m. in the evening. A 1-to-1 A to B equals CD to the upside. Gave you a price projection of 1297.80. What we actually saw Goldilocks hit here during this session here. This is the 10 a.m. This is a 2-hour chart that we're looking at. The high thus far, 1297.60. You got to like that out there. Right now we're seeing a bit of a pullback inside of Goldilocks. The real key is going to be 1283.10, 1288.20. If, in fact, those levels get hit, they hold as support, gold is likely off to the races. 877-927-6648. Steve Rhodes, TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures off 61 points right now, trading out at 17,031. In the pre-markets out here, we've got a few things that are jumping to the upside and to the downside. You've got the Signet Jewelers, SIG is the ticker symbol. Closed at 108. It's up $8 right now, trading out at 116.50. They're out with numbers, $1.23 billion in revenues. That's up 40% out there from $880 million. So they are doing things right out here. Their net income looks like $58 million, though, versus 67, so they've invested a lot of money in top-line growth. Nonetheless, trade out at 116.50. 116.50 is going to take you beyond its most recent swing point out here, which was July 16th. That high was 113.08, so that is quite a move. Now, this thing has been on a roar to the upside. If we take a look at last time we saw a huge sign of strength out here was February 19th, 13 million shares to the upside out here. This sets up a large A to B equals CD pattern this morning if it can hold that B point. Now, I'm just going to show you the small one. The small one, we're going to use the May 15th low. That's going to be our A point. B point is going to be, looks like the high from July 16th or right around there. And then the low on August the 1st is going to be our C point. The 1-to-1 A to B equals CD suggests 118.48 to 123. So it's going to gap up not into the 118 level, but not too far away from that. So that's jumping to the upside. We've got Rose Therapeutics. Repros, sorry about that if I'm mispronunciating. Boy, that's not a good word. That's not even a word out there. In any event, RPRX, that's a ticker symbol. They closed at 18.21. They're trading at $21. This is breaking its trend, it looks like, but it's running into a huge supply line out here. If we take a look at its supply line, it should run into substantial resistance at the low from the gap down on October the 22nd out there, 22.61. That should be a line of defense out there inside of that ticker symbol, RPRX. Tech Mira Pharmaceuticals, TKMR. Now, I just saw a report out there. They're going back to rescue the stranded passengers on Gilligan's Island. That's that island reversal pattern from August the 11th out there. It's trading at 21.36. In order to get back to that island, it needs to get up to the 23 level. But that's a high volume bar out there. And I believe I saw something come across my screen, 20,000 cases of Ebola or more being reported out there. So that's a bad scene. I think these are the guys that have one of, I can't be for certain. I think they are one of the entities out there that may have something to help combat that terrible plague out there. That is Tech Mira Pharmaceutical. If we take a look at things to the downside here, the souffle has just lost its poof out there. Williams and Sonoma, they are really trading to the downside hard out here. Closed at 74.89. It's trading at 66.95. They had revenues of $1 billion versus 982, so not too shabby there. Net income, where's their net income? It looks like $50 million versus 48.9. They must be guiding lower out here. They must be guiding much lower. They just simply, and when I would say souffle, look, folks, if you like chocolate souffles, if you like the kind that they serve at Roy's, great restaurant in Hawaii, it has expanded, over the last many years out there. If you've never tried, if you like chocolate, you got to have one of those chocolate souffles. Well, the cool thing is that Williams and Sonoma, I heard, I don't know for sure. Well, that's not a true statement. I do know for sure that if Williams is, and you can order it online. I think it comes in like this little tub out there. You take out one of those little ice cream scoops, you stick it inside one of those little souffle dishes, you stick it in the oven. I don't know for how long, half an hour or something like that. And man, what comes out is one of the most beautiful desserts out there. Anyways, you want to know where Williams and Sonoma is going or what the issues are? Look, Williams and Sonoma right now has had two very nice signs of strength out here, and it's going to trade down right into one of them. That last sign of strength, well, that took place on May 22nd. 4 million shares, the upside, the bottom of which is $67. The bottom of the top of that gap is actually the May 21st high, 64.43. There's another sign of strength. If we go back a little further left on our charts, that is the May 13th level, and that high out there is at 65.87. So Williams and Sonoma does have some friends, does have some bullish friends out here. We'll see if those levels hold as support. WSM is the ticker symbol there. Abercrombie and Fitch, ANF is the ticker symbol. They close at $44. They're trading down at $41 out here. They too out with numbers. They generated net income of $12 million versus 11.4, and the revenues, I don't see it. But that's okay. Let's see what's $41 going to take us into for Abercrombie and Fitch. Had a little gap up right here, and that was at 42.79. Doesn't look like a whole lot of damage being done out here. 877-927-6648. This is Steve Rhodes and TFNN. Thanks so much for being here, folks. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 68 points. Trading out at 17,053. S&P off 8, traded 1992. NASDAQ Composite off 18 points at 45.51. Russell 2000 off 5 points, trading out at 1166. NASDAQ 100 off 14 at 4,058. The S&P Volatility Index, the VIX Index up 61 cents right now, up 5%, trading out at 12.39. Still below that 50-day exponential moving average out there. We want to make sure that we keep our eye on that. Leading the charge, the upside, dollar-wise out here, you've got Signet Jeweler. We talked about that. That's up about $8, up 7% as we speak. Repros Therapeutics up 12%, up $2.23. Tech Mirror Pharmaceuticals up a couple bucks. That's up 11%. You've got the Nugget, the direction shares for the gold miners out there, up about 3%, up $1.42. We've got Twitter up 50 cents out there, a little over 1%. To the downside, Williams and Sonoma leading that charge. That's off 10%, down $8. Restoration Hardware, RH is the ticker symbol. They're off about 4% this morning. I don't see any news behind it. Let's go see where Restoration Hardware is trading down into. The reason is, if you take a look at, Restoration Hardware, let's go put that line of support out here, which is $78.75. That is a wide price spread accelerated move. It is, at least on this chart here, the time frame we're looking at, its second huge sign of strength off of the bottom out here. So coming back into 78.75, testing that level, doing it less than 7.3 million shares, that would be a potential buy point. If that level fails, then the area of support that you would be looking at inside of Restoration Hardware for a potential buy is 72.23. That is the bottom. That's the bottom of the gap out here. That's from the trading session of June the 11th. 3.3 million shares on that trading session as well, so pretty decent volume there. Now, at the highs, no real volume, nothing substantial out here. But if we take, let me pull Restoration Hardware back just a little bit further. It did complete an A to B equals CD pattern. Let's go see which style, 1 to 1.272 or 1 to 1.618. The A point's going to be down here right around the February 5th low. The B point going to be that move in April 1st. A retracement looks like probably 0.618, 0.786. Hey, how about that? Makes your 1 to 1.618, A to B equals CD. I mean, almost right to the tick. 94.08 was the price projection. It didn't do that. It got to 94.50 before giving you a bearish reversal signal out there. That was that bearish engulfing candle that had formed on the trading session here of July 1st. Now all we're seeing here is just simply a consolidation sideways into that last sign of strength. And really, that last sign of strength is what's being tested here today, the top of which, by the way, was 78.75. So Restoration Hardware doesn't look too shabby to me. It's doing what it's supposed to do, which is after it makes that 1 to 1.618, A to B equals CD, do something slightly different this stage here. In fact, if we take a look at retracements inside of this equity, I'm going to use the C point retracement. So from that C point up to the high that was put in out here, it has not even made a dead cat bounce of 0.382 retracement. That would get you down to $80.84 out there. That is on ticker symbol RH, Restoration Hardware. We've got Baidu trading to the downside. Baidu off about $3 right now. Let's go see. Baidu also has a big, huge sign of strength out here. Almost looks like we're looking at the same chart, but we are not. Baidu has one huge sign of strength out here recently, July 25th, 12.5 million shares to the upside out here. Now, in the case of Baidu, I would say that the buy point on this becomes a test of the bottom of that gap up. That would be the trading session from July 24th, and that would be right at a price level about 205.50 out there. You'd like to see price pull back, quite frankly, into that with less than 6.8 million shares. Right now, today, it's trading inside its most recent swing point, which was August 1st. That's got 5.2 million shares. We've seen 350,000 shares exchange hands so far today. That is what's going on with Baidu. Let's go take a look at AutoHome, ATHM is the ticker symbol. That's trading to the downside here. Now, in the case of AutoHome, talk about a big reversal yesterday and then some follow through today. Let's see here. Now, AutoHome had a big move and some nice volume. So this thing really broke out. It's trading back into the area where it broke out. But yesterday really was coming back with a bit too much volume. 2.7 million shares after making a high with 3 million shares and then breaking out with only 3.8 million shares out here. So if we take a look at AutoHome, 45.60 is its market profile low. So that should be an area that would hold that support. I'd have to say the real level of support, though, is going to be that breakout session. The low from August 21st out there at 43.04. The low from August 22nd is 43.27. That's the area that really needs to hold as support and needs to do so with some light volume out there. And that is on ticker symbol ATHM out here. Yeah, that's really all that I would be looking at there. Now, let's go take a look at some things to the downside out here. Let's go check in on currency pairs. Let's go see what we have going on out here. Let's take a look at your friend and mine, the euro U.S. dollar. I believe yesterday it was forming or attempting to form a bullish engulfing candle. It did. It's not having any follow through here today. That's really what you like to see is some follow through out here. We do not see that inside the euro U.S. dollar out here. A continued move lower is going to bring your 1 to 1.272 A to B equals CD into play. And that price projection is 1.3075. At this stage, we would have to assume that that is the case, that you see the euro headed to that 1.30 1.3075 to 1.3019 out there, especially if the low from yesterday gets taken out. That price point is 1.3151 out there. So no reason yet here to go long the euro. What we have seen is it is in the extreme oversold condition, utilizing that 14th period relative strength indicator out here. And yesterday's sign for the bulls, they are being trampled as we speak right now. Let's go check in on the Great British Pound, U.S. dollar, but we're going to have to take a quick stop over in Japan first and take a look at the U.S. dollar, Japanese yen out here. Now, this has made the 1 to 1.272 A to B equals CD. Of course, this broke a descending price channel out there. It did it with conviction on July 30th. The U.S. dollar, Japanese yen very likely is going to at least make a 100% move and get back into the 105.48-ish type range out there. It got back as it was making that 1 to 1.272 A to B equals CD to the upside. What it was also doing was just simply working up an overbought condition, and it's doing it in essence by working its way sideways out there. That is bullish action. We take a look at that Great British Pound, U.S. dollar. Now that has formed two bullish candles here at the bottom. The euro could do the same. The Great British Pound could just be slightly ahead of it. In the case of the Great British Pound, made a bullish engulfing candle on the 25th, gave it up on the 26th, and then yesterday got right back. So we know that the bulls are truly trying to defend this 1.6535-ish area inside of this currency pair out here, but struggling to get any kind of follow-through today. Logical area of support or area of a bounce should take this up to about the 1.6785. This because of this this type of move to the downside out here. This truly is some central bank action. I mean, this is a linear move out here. If you pull this back, you typically don't see linear moves like this too often. You take a look at some of these small-bodied candles also on the way down here, and it's as if the trading desks were given the orders time to start going short this currency pair, unloading this, and doing it in a way that wouldn't totally raise any kind of eyebrows out there. And it looks like these 2 days are when they just finally flush their positions out here. So whoever, and this is just a theory out here, it's not one that I can prove, that's for sure, but it has that signature. And so you can see down here on August 13th and the trading session of August 19th, those two wide-ranging bars there, that was the flush down the drain to alleviate the remaining portion of that position. And now we see the bulls trying to come back in here and take the opposite side of that trade as we speak right now. Nothing extremely bullish. We just simply know where they are hanging out at the moment. And when I say nothing extremely bullish, because no real pattern of sorts, no Gartley buy pattern or anything along those lines that exists out here inside this currency pair as I take a quick peek at it. If we look at that U.S. dollar Canadian out here, currency pair, that had moved out of a little rising price channel out there and did it with some conviction being that wide-ranging bar to the downside. It's trading right at about the 0.38, well, it's trading right at the 0.382 retracement, which would be $1.08 out there, and it's trading at $1.08 out here. If it moves below there, likely what we will see is move down to about a 1.077. That could form the C point of an A to B equals CD to the upside out there. That is the pattern that I am looking at it likely forming, but we won't know until we see a price move down to the 107 area and take a look at what goes on from a candlestick standpoint and then reversal from that point. That's what's going on inside the currency market. We covered gold. Let's go take a look at we covered gold. In essence, that was silver as well. So let's go take a look at, what else do we want to take? Let's go take a look at the daily charts here for the futures. We'll save the indices and the indexes for the next hour. So let's go take a look at what's going on here on the daily charts. Let's start off with the S&P 500. The S&P 500, if we take the S&P 500 futures contract is really what I should say out here. What do we know about the ES Mini? Well, number one, it's trading right now into its B point, the high of which is 1985.75. We're trading 1988 as we speak right now. That's a potential B point of an A to B equals CD to the upside that would take price into 2024. We do not have any bearish reversal signals. Yesterday was not a bearish reversal signal inside the ES Mini. If we take a look at retracements out here, let me get rid of the A to B equals CD pattern. Let me do that. Let's pull that off of the screen out there. There we go. If we take a look at market profiles, boy, on a daily chart, it's got a long way to go before it gets back to the resistance area, and that's at 1940. Let's see what stops are along the way on any ensuing pullback out here, and that would be from the August the 8th low up to the high that was recently put in here a couple days ago on August 26th. Hey, a dead cat bounce takes you to 1958. That's still quite a ways down because you're at 1989 right now. So what are we taking a look at here? You know, we're in the lazy, crazy, hazy days of summer. How about that? I'm not sure if those are the exact words out there. Until the ES Mini cracks the 1987.75 level with conviction to the downside, all we're seeing is just a little bit of profit taking and a sideways market with a light trading out there for today and tomorrow. And, we can probably expect the market to be held around these areas, maybe push a bit higher out there. I will change my opinion on that if I see any kind of significant move below that 1987 level. Hey, there was one currency pair that I didn't, not to jump around too much, but let's go take a look at our Euro Japanese yen currency pair out there, as long as we're talking about what's going on inside the markets out here. Where is that? Come on. Where is that on my screen? There we go. Let me pull that over. Let's go take a look at that, see if we have any feel for what it's doing. Then we'll go back to the daily contracts on the futures out here. So we look at the Euro Japanese yen. You speak about retracements out here. If we take a look at from its most recent low, which was put in on August the 8th. Huh, interesting. It was low that was put in on August 8th. I think our markets put in a low on August the 8th. Hey, guess what? The correlation, maybe it's back in full swing out here. If we take a look at the high from August 22nd, if we go from the low to the high, we'll see that the Euro Japanese yen trading right at that point, 618 retracement number, 136.58. It's trading at 136.58 right now. We'll see if, in fact, this area holds. If it does and creates an A to B equals C to the upside, that would be bullish for the currency pair, also be bullish for the markets out here. We'll see what they will do out here. Now, let's go back. And so with regard to the sell-off this morning, just trying to put all that stuff together out here, unless that currency pair totally begins to crater and fail out there, that bodes well for this little sideways action, maybe move higher or what have you today, tomorrow out there. Don't be surprised if, in fact, that takes place inside of the markets out here. If we go take a look at the NQ, let's go take a look at what Superman looks like out here inside the markets. What we do know about the NQ is a 1.6 million expansion. The expansion I'm referring to is of swing points from the expansion of July 24th high down to the low that was put on August the 8th. Well, that 1.618 number is 4,093. We have not hit it. We did get a little doji candle out here, yes, so that means the open was at 4,073 and the close was at 4,072.25. That qualifies as a little doji in Stevie's window out there. Hey, a close lower today. Yeah, you've got some leaves falling off of the tree. Of course, that was a little dust ball. Excuse me for that quick delay there. Good thing we're going into a break here. We're going to see if I can pull the voice together. You got to hate those dust balls out there. Now, let me, sorry about that, folks. Now, let's go take a look at retracement levels there. Maybe coming back. If we go from that low out here, from the August the 8th level up, I'm going to have to do this when I get back from the break. Right now, we've got the Dow. It's trading up 87 points, S&P down 8. Steve Rhodes, TFNN. We'll be right back, folks.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Stevie the Cat here. I'm thinking that was a fur ball, not a what's it called? Is that what they call it? A hairball, fur ball, something like that, versus a dust. I wouldn't struggle to get that one out of the throat. Too much information, I believe, is what they say. Hey, right now you got the Dow off 74, S&P's down 6. The NASDAQ composite is off 13 points. Let's go take a look at our little tool out here, the Rhodes Momentum Trading Indicators. Let's take a look at the weekly and the daily chart. If you're watching us on TigerTV. The top portion of the chart is the weekly chart for the NASDAQ out here. You pull this back and take a look at the nice little strength. The color-coded areas that you're looking at, they help to identify areas where you should be cautious. Yellow, like a yellow light. Red, where you ought to be taking a look at either the short side or make sure that you are looking at adjusting your stops. And blue means you've got the blue light, not the Kmart blue light special out there. Got to come up. Blue skies, though. I like the sound of blue skies out there, but that's really the light blue area. Light blue area here where you start to see these little red signals. Those are telling you that you have nothing but buying pressure out there. It's a tool that allows me to measure. It's the EKG of the markets out here, because typically you should have markets. If I did a what I think was a fairly good overview yesterday on the 9 o'clock hour, which you can get the archive of that on Channel 9. So go back and listen to that. A pretty good tool, in my opinion. It's a great tool because it works. The nice thing is that once I build a tool, I'm able to go back and really test it and go take a look at it over the course of time. Well, shoot, I got the data for the Dow that goes back to 1928 and a half out there, and so these tools that I have created that help us to understand what the markets are doing. What's so great is you don't have to worry about news, right? You're just really trading the technical patterns that you see inside of the marketplace, and so really, really great. Anyway, right now, what do you really care? Well, look, at this stage here, as we're speaking from a weekly standpoint, you see you got another red signal out there. Hey, nothing but buying pressure on the weekly chart. Daily chart has started to shift just a tad. We've seen the yellow light flip on its switch, and that is today. That's just simply because of today's action. However, you get above this level, this little shooting star from August 25th out there at 4,078.50, and the market will just continue to motor on. Remember, we took a look at expansions of swing points on my system earlier, and that was the price target for the NQ to get up and hit. Maybe once it gets up there, then we have some more serious action that we will take a look at. The Dow has been the laggard here this morning. If we take a look at the Dow, we put the 120-minute chart out here, put things in perspective. Last time we had a big scare in the market was on this day right here, about 12 noon. That was Friday. That's as there was something going on between Russia and Ukraine. That's all that I can remember, but that turned out to be a nice buying point. If we go from that low to the high that was put in out here back at about 12 noon on August 26, hey, a dead cat bounce would take it to 16,908. We're not even anywhere close to that. We're at 17,041 right now as the Dow on its 120-minute basis tries to get above its market profile low out there and get back into bullish formation. So that's, in essence, what is going on inside of the markets as we speak. I guess one last thing, I'll give you the VIX, if I can. The VIX 50-day exponential moving average out here. That's on a different screen. That is priced out. Oh, that's interesting. That is interesting. Instead of doing that, let's put this on the screen for you out here. How about that? We got that. Now take a look. This is going to be important. So today's trading session, muy importante, as I like to say. That 50-day exponential moving average, 1283. The intra-session high so far has been 1273 out there. Look for that level. If we see price move above that level, that can change the whole scope of everything we're looking at. Otherwise, price just ran into resistance inside the volatility index. Folks, have a great Thursday, and I look forward to seeing you soon, hopefully in about 10 minutes. Take care.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.